has to give me the co-host so I can turn on my video. I can't get my video up. Can someone please help me? All right, just to check, guys, you guys can hear me? Just in case for some reason you can't see my video, at least you can hear me. All right, you guys can hear me, right? Okay, so one more time, can someone help me to get my video out? I need to, okay, I think my video's up. Is my video up now? You can see me now? Okay, cool, great. So hello everyone, good morning, or good afternoon, or good evening, depending on where in the world you're catching me from. We've got people from 124 countries, and we've got over 2,100 people in the room right now. So great to see all of you, and welcome to this webinar. So I believe that many of you are here today because you want to create another source of income for yourself, trading the financial markets from home and anywhere in the world, in fact, right? And to create a source of income that is recession-proof, that's pandemic-proof. So today I'm going to share with you what it takes to become a consistently profitable trader, and in fact, how you can even trade for a living eventually. So take lots of notes, and if you got questions, you can type your questions in the chat box. I can see your questions, and at the end of the webinar, I'll do a Q&A. So I'll do my best to answer as many questions as possible, but I also have my team that's going to help to answer questions along the way as well. All right, so with that, let's begin. So for those of you who attended my first webinar on investing, the focus was on building wealth, compounding wealth for investing. Now, if you have not watched my webinar on investing, please watch it. You can watch the replay on the blackmarket.piranhaprofits.com website. I repeat, it's blackmarket.piranhaprofits.com. You can watch the replay of my first webinar on investing. So again, the main objective of investing is really to just save your money and let it compound over time to huge amounts of money so that you can be financially free, financially secure from the rat race in the near future. All right. And many people that think that to invest, you need to take high risk to get high returns. And if you watch my first webinar, you know that's absolute rubbish, right? In fact, you can get high returns with very low risk if you know how to invest in fundamentally very good businesses. So my approach is, I keep saying I'm very conservative. I only invest in the top 1% of companies in the world that are fundamentally strong. And if you buy a portfolio of great businesses and buy them when they are less than what they are worth, when they are selling for less than what they are worth, when they're undervalued, it is impossible to lose money. It's impossible to lose money, right? So you can actually invest in a very safe way, in a very stress-free way. And again, if you have not watched, check out my first webinar, right? So that was on investing. Now, for today's webinar, it's going to be on swing trading. And again, the purpose of swing trading is different from investing. Investing is accumulating and compounding wealth over time, right? But for trading, our focus is on generating short-term profits from generating cash flow from the markets. So what's the purpose of that? Well, two reasons. Now, one reason is we can generate cash flow and use that cash flow to invest into great companies, right? Now, many of my students, myself included, we do both investing and trading. So I've got two portfolios, investing and trading, right? So from trading, I generate short-term profits and cash flow, and I use part of that to put it into my investment account to buy even more great companies when they are underpriced. At the same time, from the short-term profits, it can be used to pay your expenses, either part of your expenses or all your expenses, right? Eventually when you can generate enough, okay? So let's focus on swing trading for this webinar. Now, a lot of people ask me, Adam, I want to trade for a living. I want to trade full-time, like many of your students. And how much capital do I need to do that? So it depends on two things. The first thing is it depends on how high your expenses are, your lifestyle. So if you have got a very extravagant lifestyle, you've got a private jet, you've got many mansions, right? Then you've got high expenses. You're going to need a lot of capital to generate the cash to pay your expenses. It's going to take a lot for you to trade full time, right? But if you have got reasonable and modest expenses, you live modestly, then lower expenses, easier to trade for a living because you need less capital. Follow so far? The second thing it depends on would be your skills. What returns can you achieve on your capital? Of course, the more skillful you are, you can get higher returns on your capital. So you require less capital, right? So let's take a look at some numbers right now. So let's assume, for example, now I'm from Singapore. So in Singapore, many people tell me that, hey, I need at least 5,000 a month to survive, monthly expenses. So 5,000 a month, that would be $60,000 a year in expenses. Again, this is just an average. Some of you will need a lot more, some of you need a lot less. Let's take this as an example. Now, if you don't have the skill to trade the financial markets, then the only way to create income from your capital is to put it into the bank and get interest, right? That's the total no-brainer way if you've got no skills. Now, if you put into the fixed deposit, how much capital do you need to generate 60 grand a year? You need a lot of capital. Why? Because the bank deposit rate is now less than 1%. It's like 0.2% in Singapore or 0.1% in the US, right? Now, eventually, good news, interest rates will rise. But no matter how much they rise, they're not going to rise that much, right? So even if interest rates go up to 1% a year, how much do you need? Well, you take 60,000, divide by 1%, that gives you $4.8 million. So if you don't know how to trade, then you need $4.8 million, put it into the bank, you get 1% interest, you get 60 grand a year. Yes, you don't have to work anymore, right? But of course, that's like crazy, it's too much, yeah? Now, what if you buy dividend stocks? Now, there are some stocks that they just pay dividends, right? Like 3M or Lockheed Martin. These are dividend kind of stocks, all right? Now, in the US, even if you look at the high dividend paying stocks, they average about 3% a year in terms of dividend yield, only 3%, right? So again, if you take 60,000, which is what you need a year, right, to live, divide by 3%, you still need $2 million if you buy stocks and get dividends. Now, those of you in Singapore, we get a bit higher yields if you invest in Singapore REITs, for example, real estate investment trusts, or you invest in Singapore banks, you get a bit higher, like 4 to 5% dividend yield, right? But even then, you still need about $1.5 million. So you need a lot of capital again to generate the kind of cash flow, right? Now, the good thing is when you learn the skill of how to trade the financial markets, then you should be able to achieve on average about 5% return a month, right? On average, 5% return a month. Now, some people say, but Adam, I've heard other traders able to achieve 10% a month, 20% a month, right? Yes, there are traders who are more aggressive. They take high risk. They can get 10, 20% a month, or they are very, very experienced, okay? Yes, there are, but I would rather look at something more conservative and not aggressive, more conservative, more reasonable. So I'll say 5% on average is reasonable, okay? So if you can get an average of 5% a month, okay, how much capital do you need? Now, again, this 5% is not a year, it's a month. It's a month, right? So you look at the monthly expenses, 5,000, okay? And you divide it by 5%, what do you get? You get 100 grand. There you are, right? So in other words, you've got $100,000, okay? On average, you're generating about 5,000 a month in trading profits. Now, again, it's an average. In reality, you can't get exactly 5% a month. It doesn't work that way, right? So some months you may get 8%, some months you may get 1%, some months you may get 10%, some months may even be negative, right? So understand that in trading, it doesn't mean that every month you will make money. No, You may have losing months. It's part of the game. But if you average it out, a 5% return a month is reasonable. All right. And I'll show you the mechanics of how that is achieved later on. Now, next question people ask would be, okay, Adam, now to trade to get average 5% a month, okay, how much time must I commit? Now, what do you think? I want you to type your answer on the chat box. To be able to trade profitably and to even trade for a living, how much time do you think you need to trade a day? Type your answer. Is it like 10 hours, 20 hours, 5 hours? What do you think? All right. So some people say 4 hours, some say 3 hours, some say 1 hour, 2.5 hours. Okay. Now, it really depends on your trading style. Okay. So, for example, some people are day traders. So, day traders means they go in and out within a day and they have to stare at the screen. Now, I used to do day trading many years ago when I was younger, right? But since I got married, I got kids, I've got no time to do day trading. And in day trading, yeah, you need like 4-5 hours a day. And I used to think that the more you trade every day, the more time you spend, the more money you get. Rubbish. That is totally rubbish. That's one thing I've learned over the years. So today, the way I trade is I'm a swing trader, which means when I trade, I don't get in and out within one day. I hold the position for at least 2-3 weeks or even a month. That's a swing trade, all right? So the good thing about swing trading is you don't have to spend much time. For me, on average, on trading, I spend 1 hour a day. That's it. 1 hour a day. In fact, later you'll hear from some of my students who'll be sharing their own results, and most of them will tell you the same thing. They spend 30 minutes to 1 hour a day. That's it. Okay. So I repeat, you can actually trade full time. You can trade for a living with just an hour a day. So that means that you still have 23 hours left every day. Minus your sleep, you still have 17 hours. What are you going to do? So the good news is I tell people that once you learn how to trade and you can generate enough profits from your trading, you can still do other things. You can still have a job which you love. You can start another business that you love for the fun of it, and you can still earn extra income. Okay, so you can create actually multiple sources of income. Now, when you first start trading, of course, as a beginner, you need more time. You need maybe 3 hours or 4 hours at the beginning because you're not familiar, right? But once you get the hang of it, once you get the routine, trading becomes very mechanical, very boring, and an hour a day, that's it. All right, so just bear that in mind. Now, the other thing people say would be, Adam, you said I need $100,000, all right, to trade for a living. I don't have $100,000, too much, okay? Now, again, this may not happen overnight, okay? So I know some of you may only have 2,000 to start, or maybe 3,000 or 5,000, and that's fine. So the point is, start small, all right? Start small and slowly build up your account size, your capital, until you reach, again, $100,000. You know that once you reach about 100 grand, you can comfortably achieve about, 60,000 a year in trading profits on average. Okay. Now, one thing I would really recommend to you is this: don't rush. Okay. If you are newbie and you've never traded before, focus on acquiring the skills. It's like, trading is no different from being a lawyer or a surgeon or an architect. You need to learn, you need to practice. Or being a pilot. Let me ask you this: if you go to flying school, all right, and you learn how to fly, do they allow you to fly the plane immediately with passengers? No, they put you into a simulator, all right, and you're gonna take off and land, and you may crash a few times initially in the simulator, but no one gets hurt. Only when you can land successfully, take off, then you fly the real plane, correct? Now, the same thing is true of trading. The problem a lot of people have is they want to rush in to make money. So the moment they learn something on the internet, they rush in, they start to trade, they end up losing money. It's like a pilot, they take the plane up the first time, but they're not familiar and they crash the plane. So when you first start, paper trade first. Do not use real money. Paper trade with virtual account. Only when you can make money consistently, then you use real money. So, all right, don't rush. Make sure you go step by step. All right. Now, then when you use real money, start small. Start with 3,000, 2,000, and then you slowly build up your account, and that's how you build your skills. And once you reach like 100 grand, 200 grand, then you'll be able to trade for a living, right? So you have to go through the process. You can't rush the process. You follow me so far? Okay. Now, let's move on. The next thing I like to share is this. Now, one reason why a lot of people fail in trading is because they come in with the wrong expectations, and the wrong belief systems. Okay. So I want to tell you about the reality about trading and to cut a lot of the bullshit that's been told to us by some gurus or the media, right? They distort our thinking about what trading is really about. So what are the common myths people have? Myth number one, many people think that to be a successful trader, you must be able to predict where the stock price is going to go in the next 1 day, 1 week, 1 month, or even 3 months, right? Let me ask you a question. Do you think that successful traders can really predict where the stock is going to go in the next 1 day, 1 week, 1 month? Yes or no? Honestly, do you think they can predict? Type your answer, yes or no. Okay, great. All of you say no. You are enlightened. Hey, I've got a few yeses, all right? The answer is no. No one can. Now, think logically, okay? Every day, the stock price goes up, down, right? Now, what makes the price go up and down every day is demand and supply in the market. If there's more demand than supply, price goes up. More supply than demand, price goes down, right? So it's the buying and selling of millions of people that drive the price every day. Now, do people buy and sell based on logic or emotions? Logic or emotions? I can tell you that for the majority of people, their buying and selling is driven by emotions, fear and greed. When people are greedy, they buy, right? Fearful, they sell, right? And emotions can change very fast in the market because of news. Because like a few days ago, people are like, oh, greedy, the market's going up, right? And then suddenly now this Omicron variant virus, oh my God, it can scare this sound, comes down, right? So news, emotions drive prices every day, up and down. Now, let me ask you this question. Can you predict tomorrow's news? Can you predict the news next week or next month? Of course not. So if you can't predict the news in the future and you can't predict the emotions of people, how can you predict where the price is going to go? It's ridiculous, right? I don't know about you, but I've been married for 21 years and I can't even predict my wife's emotions the next day. My wife can go to bed really happy, smiling, laughing. Next day she wakes up, her face is black, she scolds me. All right. So if I can't even predict one woman, how do you think I can predict the emotions of millions of people in the world buying and selling? It is impossible. All right. So the moment you realize that you can't predict the stock market and no one can predict the stock market, that is when you free your mind from the matrix of the markets. As long as you think that people can predict the stock market, you'll be trapped going in circles all your life. Okay. So what's the reality? The reality again is no one can predict where the price is going to go with certainty. All we can do as successful traders is we can only identify high probability trade setups. So by reading the chart patterns, by reading technical analysis, by reading trends, support and resistance, we can tell, is the price more likely to go up or more likely to go down? So again, it's a probability. It's only a probability, it's not 100%, but we can't predict 100%. Follow me so far? So you can find a trade with all the right technical patterns and it can still go down, right? Because it's part of the game, it's a probability. Understand? right? So because of that, in trading, you must always have stop losses. You must always account for the fact that any trade can be a losing trade. And you got to cut loss early, and any trade can be a winning trade. So you must know when to take profits. That's how you become a responsible professional trader. And not saying it's gonna go up, it will sure to go up. Okay, no, okay, no such thing. Yeah. Okay. Myth number 2. People think that to be a successful trader, you win all the time. You got high win rate. You win 90%, you win 80%. Is that true? Not really. I can tell you that for stock trading, let me emphasize this properly. For stock trading, I can tell you that successful traders, they only win 50 to 60% of the time. In fact, if you trade stocks and you can win 60% of the time, you are among the best traders in the world. I know many professional traders who would sell their grandmother to get a 60% win rate. Yeah. So don't think that you can get 80% or 90% with stocks. You can with options, and we'll talk about it later on, right? But I'm saying for stocks alone, 50 to 60%, you're already really good. All right. Now you may say, but Adam, if I only win 50% or 60%, how do I make money? So the secret of profitable trading is not about having a high win rate. No. The secret of profitable trading is about managing your risk to reward ratio. In other words, to ensure that when you lose less. When you win more. So when you win more when you're right, you lose less when you're wrong, you still make money consistently because the wins more than make up for the losses. Understand? Right? And the second key to successful trading is about position sizing. Another way of saying money management. That means every time you trade, you only risk a small percentage of your capital. Like you only risk 1% of your money on any trade, or at the most 2% of your money. Why? Because again, in trading, you can have losing streaks where you have many losses in a row. Happens to everyone. Okay, you're going to have winning streaks as well. So when you risk a small percentage of your capital, and when you go through those losing streaks, it won't kill your account. You can make it back very fast. But if you risk 20% of one trade or 30% of one trade, and you got 3 or 4 losing trades, goodbye, Charlie, you blow your account. And that's what happens to a lot of newbies. They risk too much. Follow me so far? All right. So the next question is this. How can we ensure that we get a high win rate, that we are right more than we are wrong? Again, we can't predict for sure, but how do we make sure that the odds are in our favor, that we get a high probability of the price moving in our direction? So to do that, we use certain ingredients, right? But before that, let me just show you this example of what I mean. All right. Now, let's say you do an average of 10 trades a month. Now, again, a lot of people think that to be trading for a living, you have to trade every day. You have to take many trades every day. And that's, again, total nonsense. Many top traders I know, many professional traders I know, they do no more than 10 to 20 trades a month. That's it, 10 to 20 trades a month. Okay. So one thing you have to understand about trading is that quality is more important than quantity. It's not how many trades you take, it's the quality of the trades you take. And many traders make the mistake of forcing a trade, where they say every day I have to take a trade. No, if there's no good trade, if there's no high probability setup, don't trade. Let the trade come to you. Don't force a trade. And I can tell you that there are not many top quality trades that appear every day. So there are days when I don't trade at all because there's no good trade. But on days when I get good trades, I take those trades. All right. So again, let's say you take 10 trades a month. That would be 120 trades a year, right? And let's assume that you're not too skillful when you first start. So your win rate is only 50%. Over time, it will improve, but let's say you start with 50%. Yeah. And let's assume that when you take a trade, you risk 1% of your capital. Okay. Remember, in trading, when you enter a trade, you always put a stop loss. So if the price goes down, hits a stop loss, you cut loss, you get out, and you lose 1% of your money. Later, I'll show you how to calculate the number of shares to buy so that when it hits the stop loss, you always lose 1%. Now, once you put a stop loss, you have to put a profit target. And you want to ensure that you take profit not too early. You only take profit when your profit is double the initial risk. So that when it's a winning trade, you get 2% return on your capital. Right? Okay. So assuming you follow these rules, you follow the trading plan. Yeah. So if you got a 50% win rate, what does it mean? It means that in a year, out of 120 trades, you get on average 60 winning trades and 60 losing trades, correct? Now, the thing about trading is that you don't always get one win and one loss and one win, and it doesn't happen that way. You could have win, 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 win first, and then loss, 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 and then win, right? So it comes randomly. You have no idea when the wins and losses will come, okay? So out of all the trades, let's say, 60 trades, you lose, and each time you lose 1%. So that's minus 60%. Okay. And every time you win 2% return. That's 120%. So net, that gives you 60% return a year. Divide by 12, that's 5% a month. So that's how we get an average of 5% a month based on this trading plan. Does this make sense? You follow? All right. Now, some people say, but Adam, I don't want to have losing trades. I only want winning trades. Is that possible? No, it's impossible. Losing trades are part of the game. You got to have losing trades. You got to have winning trades, right? So I tell my students that don't treat trading as gambling, but treat it as a business. Now, let me ask you a question. In any business, what do you have in any business? In any business, you always have sales revenue, right? You have sales, and you got to have cost, right, of the product, right? We call that cost of goods sold, COGS. So sales minus cost of goods sold gives you the gross profit, right? Gross profit. A bit hard to write with my trackpad, but doing my best, right? Gross profit, right? And then you minus your operating expenses of the business, like salaries, rentals, utilities, and then you get your net profit, correct? So that's a business. Now, let me ask you this. If you have a business and you're selling shoes, and each shoe sells for $300 per pair, and when you sell the shoe, the cost of the shoe to you is, say, $150. So what's your gross profit in this case? Your gross profit is $150, right? What's your profit margin for this business? What's your gross profit margin? Can someone tell me? Of 300, you keep 150, and 150 is the cost, right? Your profit margin is 50%. Is that a good profit margin? It's not bad, right? Now, so the same thing in trading. So notice that in trading, when you get a winning trade, you get 2%. Losing trade, you get 1%. So this is like your sales. Winning trade is like your sales, and losing trade is like your cost. So even at a 50% win rate, it's like every sale you make, you got a cost. And what's your profit margin? 50% as well. So trading's a good business, 50% profit margin. Now, but the good thing about trading is you don't have operating expenses. You don't have to pay your staff. You don't have to pay rental. You don't have to pay utilities. There's no inventory, right? So it's pure profits, 50%. So when you think about it this way, you don't get upset when your trade hits the stop loss. You don't say, oh, why did I lose? No, you don't get upset because you know that, hey, it's part of the cost. Make sense? So when you think that way, you don't trade with anxiety. You don't trade with frustration. You trade in a very zen way, right? You win one, you lose one, you win one, you lose one, and that's business. And you make money at the end of the day. As long as you win more when you're right, you lose less when you're wrong. Does this make sense to you guys? All right. Now, question. What are three ways you can increase your returns? Now, again, if you do this, you get about 5% a month. But how could you actually increase your returns? Any suggestions? Type your answer in the chat box. Let me take a look. Increase your sales. Yeah, how? How do you increase your sales? Leverage, options. We'll talk about options later. Yeah. Increase your RR, trade more, take more trades. Okay. So there are three ways you can increase your returns. The first way is to increase your risk per trade. So instead of risking 1% of your money each time, you risk 2%. Right? But of course, by risking 2%, now your winning trade, instead of getting 2%, your winning trade will be a 4% return because you're always risking $1 to make $2. Make sense? Okay. So if you increase your risk per trade, what happens? Then your 60 losses would lose 2% each. Okay. And this would be minus 120. Right? And your winning trades would be 4% gain per trade. So that becomes 240%. Right? So you take 240 minus 120 gives you 120% a year, which is about 10% a month. So that's one way you can do it, by increasing your risk per trade. That's one way, right? Another way is to increase your win rate. So instead of winning 50%, you win 55%, you win 58%, you win 60%. And the only way to increase your win rate is to get more skillful, to learn, to develop your skills to identify high probability trades. So later I'm going to show you what makes a high probability trade so that we got a much higher win rate. Okay. The third thing you can do, oops, why does that keep happening? Okay. The third thing that you can do is to increase the number of trades. Instead of taking 10 trades a month, you take 20 trades a month. Okay. And that will increase your returns as well. But be careful about that, because I keep teaching my students that never force a trade. Never say to yourself, I must take one trade a day. I must take one trade a week. Or no, because that would cause you to take low quality trades. So only take a trade when all the stars are aligned. High probability trades. Okay. So again, the next question would be, how do we put this into a trading plan? So this is an example of a trading plan. So for example, if you identify, hey, this stock has a probability of going up, right? So you enter at today's price, okay? And again, when you enter, you always have a stop loss because you can have losing trades. You can't be right all the time, yeah? So from your entry price to your stop loss, the distance is called 1R. What does R stand for? R represents risk. This is your risk per trade, okay? So again, later I'll show you how to calculate the number of shares to buy so that if it hits the stop loss, you will lose 1% of your capital. Or if you're more aggressive, risk 2% of your capital. 1% conservative, 2% more aggressive, yeah? And you have to know where to put your profit target. So your profit target, when you hit the profit target, you should get double your initial risk. So in trading, you always want to ensure you risk $1 to make more than $1. You can risk $1 to make $1.50, $1.80, $2, $3, but always have that good risk to reward ratio. Okay. So once you set up the trade, then you want to ensure that your chance of going up is higher than your chance of going down. Now, of course, if you just enter the market randomly, today you say, okay, let's toss a coin, let's buy, go up, right? Or toss a coin, it's going to go down. If you enter randomly, that is 50-50, right? So we're not going to enter randomly. We're only going to enter a long trade when the odds are in our favor, that the price has a higher probability of going up. So how can we get the odds in our favor? Again, we use technical analysis. So technical analysis is reading the emotions of the market and to trade with the emotional pattern of the market. So these are all the ingredients. These are all the ingredients that help us to build a high probability trade. Now, someone's asking about value momentum investing. No, this webinar today is on trading, not investing. For investing, watch my first webinar. You can watch the replay on the blackmarket.piranhaprofits.com page, right? So go watch that one later, right? But now learn about trading, okay? All right. So what are the ingredients? The first ingredient number one, is to look for stocks that are in a strong trend. Either a strong uptrend or a strong downtrend. So when a stock is on a strong uptrend, then there's a high probability the price will go up. That's right. It's like a river current. Look for a river with a strong current. If the stock price is on a strong downtrend, then the probability is the price will go down. Okay. So first thing is to identify stocks with strong trends. So example, ta-da! This is an example of a stock in a strong uptrend. Okay, this is a strong uptrend. So how do you know it's a strong uptrend? So one method I use is I use moving averages to identify the trend. So you see these colorful lines? These are moving averages. So the first moving average, the red dotted line, that's the 20 exponential moving average, the 20 EMA. The blue dotted line is the 40 exponential moving average, right? So the 20, that's a 40. This thick blue line is the 50 simple moving average. And the green line is the 150 simple moving average. Now, here's something very simple to understand. When the 20 is above the 40, that means the short-term trend is up. And when the 50 is above the 150, it means the medium-term trend is up. So I only want to take a trade when the short-term trend is up and the medium-term trend is up. So in other words, I want to make sure the 20 is above the 40 and the 50 is above the 150 in this sequence. So when you see this sequence, 20, 40, 50, 150, it means that the stock is on a clear uptrend. Make sense? Simple? Okay. Now, do you think that all stocks are in a strong uptrend? Yes or no? No. In fact, I can tell you that at any point of time, probably only 5% of stocks are in a strong trend. The rest of the stocks are choppy. There's no clear trend. So for example, look at this one. Okay, so this is an example of a stock that is not in a clear trend. It's very choppy, right? You see the price is like, chopping up and down. It's like the airplane is going through turbulence, right? It's not flying smoothly, correct? So how do you know that it is not in a clear trend? Because the moving averages are not in sequence, right? It's not 20 above 40, 50 above 150. Look at the moving averages. They're all jumbled up. They're all crisscrossing each other. Can you see that? So when you see the moving averages crisscrossing, that means there's no trend. But when you see like that, oops. Hold on. But when you see like that, the 20 above the 40, 50 above the 150, that tells you that it is a clear uptrend. You follow so far? All right. So rule number one, trade with the trend. If you trade stocks in a clear trend, it's a lot easier than trading stocks that are choppy. Very simple. Okay. So only trade stocks in a clear trend. Now, the next thing is using the moving averages. Now, again, moving averages, they don't just tell you the trend direction, but moving averages act as dynamic support levels. Okay, what does that mean? Now, notice that on an uptrend, the price moves in wave patterns. I've repeated this many times in my previous webinars. Can you see the wave pattern? Wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down. So it's always this wave pattern. Now, notice that every time the price waves down, it would find support at the moving average. Can you see that? It hits the moving average, bounces off. 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 So I only want to trade stocks where they respect their moving averages, right? They respect the moving average because it's very simple. Because every time it hits the moving average, every time the price waves down, hits the moving average, that's when I want to buy to get in to catch the wave up. Make sense? Whereas for these kind of stocks that are very choppy, notice what happens. They don't respect the moving averages. The moving averages are cut very easily. So avoid these type of stocks in trend trading. All right. Okay, so number one, we look for strong trends. Number two, ensure the price respects the moving average. The moving average acts as a support level. Number three, I want to also ensure that when I enter the price, it is also hitting a strong support or resistance level. If I'm going long, it's a support level, right? Or it's hitting a Fibonacci level. If you want to know more about Fibonacci, you can go to YouTube, type Adam Khoo Fibonacci. I have created videos on teaching Fibonacci as well, all right? But let me give you an example right here. Okay, there we go. So look at this stock. So question one, is this in a strong uptrend? Yes or no? Is this on a strong uptrend? Yes or no? Yes. Why? Why? Because the 20 is above the 40, the 50 is above the 150. So the moving averages are in sequence. So when they're in sequence, that means the trend is strong. Number two, are the moving averages respected? Is it respecting the moving average? Yeah, so you can see over here, the price goes down, hits the 50, the blue, and bounces off. And right here, it drops, hits the 50. Do you think it's going to lightly bounce? Right? Again, wave down, hits the blue line, the 50. Do you think it's gonna lightly bounce? Again, it is not a guarantee. We can't predict absolutely, but it's a high chance it will bounce. Why? Because this blue line has been a strong support that has been tested. Now, not only that, but also notice that this level here is also a horizontal support level. Why? Because take a look. Can you see this was a swing high, and another swing high. Together, they make a resistance. And later, after a breakout, it came back, and this resistance became a support. So this level is a very significant support and resistance level. So now that the price came down, not only is it hitting the moving average, it is hitting this horizontal support. So we've got a double support. We call this confluence. Confluence is when it is hit by double supports, moving average and a horizontal support. And these are the only trades I like to take because it's very high probability, right? Now, not good enough. We need another confirmation that is going to bounce up. So I also look at technical indicators. For example, you can look at MACD, you can look at RSI, Bollinger Bands, stochastics, Williams percentage R. There's so many indicators, right? And people ask me, Adam, which is the best indicator? There's no best indicator. It's like when you want to cook a meal, there are many spices: pepper, salt, olive oil, sesame oil, right? Which is the best? There's no best. Depends on the dish you want to cook, right? So for me, when I'm doing a trend following, I like to use indicators like stochastics or the Williams percentage R. So this is what it looks like. Ready, go, boom. So this is the same exact stock. Again, you can see wave down, hits the moving average, and hits the horizontal support. Plus, if you look at the Williams percentage R, you can see it is oversold. Now, the Williams percentage R is the same as the stochastics. It works the same way. It's also similar to RSI, that when it's oversold, what happens? It's like a rubber band. You pull the rubber band, it's going to snap back. It's going to snap back. So notice every time it is oversold, what happens? It will snap back. Oversold, snap back. So notice that we are building a case. Before you enter a trade, all the stars must be aligned. Correct? So we have got uptrend, we have got moving average support, we have got horizontal support, and now we have got oversold indicator. Not good enough. We need another one. It's like building a case in a courtroom, right? We need a lot of evidence is going to go up, right? And the next one that I use and I look at would be the candlestick pattern. Ideally, when I enter, I want to see a bullish candlestick pattern, like a bullish pin bar or bullish engulfing pattern. And in this case, you can see, what is this, guys? I know it's a bit small. Let me see if I can make it bigger for you. Let me just expand this chart there. Okay, who can tell me what candlestick pattern is this called? What pattern is this called? That's right, it's a bullish engulfing, right? So now we've got a bullish engulfing on top of that. So we've got all the stars aligned. Do you think it's going to go up? Is it going to go up? Yes or no? You don't know. You can't guarantee. You can't predict the future. But it's just a good probability. Okay? Now, last thing is you also want to ensure that you trade the stock with good earnings. That right? So if the stock has strong earnings growth, sales growth, that's even more powerful. So I teach my students, ensure all the stars are aligned, and you take these trades. They don't happen very often, but when you take them, you get very high probability, right? So when we exploit repeatable patterns in collective human psychology, it gives us high probability outcomes that gives us a statistical edge in the markets. So what I showed you just now are all the ingredients, right? Moving average, Fibonacci, indicator, candlestick, right? These are ingredients. Now, you need to know how to use all the ingredients in the right quantity and create a proven recipe, a strategy, right? So when you take my stock trading course, you can order the stock trading course online on the piranhaprofits.com website. We're having a great promotion right now. And in the stock trading course, you will learn all my proven recipes, all my proven strategies that use all the different ingredients for different situations, right? So for example, these are some of my more common recipes. You've got my trend retracement strategy that you're going to learn in the course, okay? The breakout system, the momentum value rotation system, the slingshot trading system, the capitulation. So there's many strategies that you're going to learn in the stock trading course. Now, let me say, why do I need so many strategies? Why? Because they all work under different market conditions. So, for example, The first one is called the trend retracement strategy. This strategy is used when the stock is on a clear trend, which is what I showed you just now, right? So like that, right? Wave up, wave down, wave up, wave down, wave up, wave down. So when it waves down to a support level, okay, which is a support level here, like a moving average or Fibonacci level, then we buy here. When we see a bullish candlestick pattern, get in, ride the wave up and take profit there. That's called the trend retracement. Okay. Now, the breakout system is different. This one is used when the price is in a consolidation and we enter as it breaks out of the consolidation. So in other words, for this one, the price is going like that. The price is going sideways, like coiling a spring, right? Coiling a spring. So it's going sideways, sideways, right? And then we wait for the price to break out of the consolidation. That's when we buy to ride the new trend up. Okay, so that's called the breakout system, and it's got different rules from the trend retracement, right? Now, remember I told you earlier that there are certain stocks that are very choppy. It's like choppy, right? Yeah. Now, could you trade these choppy stocks? Yes, you can. Yes, you can, using the slingshot system. So the slingshot, right, we identify when it's going to shoot up from a strong oversold level. Okay, now let me show you some of these strategies. Would you guys like to learn more about some of these strategies? Okay, great. By the way, we've got like 2,800 people in the room right now. It's growing. Okay. So let me show you the trend retracement strategy. So what are the entry rules? Entry rule number one, you only do this on a stock with a clear uptrend. So question, look at this stock over here. Do we have a clear uptrend on this guy? Yes, right? You can see over here, 20 above 40, 50 above 150. All right, so that passed, right? Next, did the price retrace and test the moving average? Right? So wave up, wave down, and it's hitting the orange moving average. It's the 100 moving average, and this was tested before here, right? You can see it has been tested here. So this is a tested moving average. Yes. Next, when it waved down to the moving average, did the indicator become oversold? Did the indicator become oversold? Yes. That can you see here? Oversold. Can you see oversold? Right? So you'll bounce, right? You see oversold here, bounce. The rubber band, snap. Okay. Next, do we have a bullish candlestick pattern? Do we have a bullish candlestick pattern here? Again, this is a bullish engulfing pattern. So all the stars are aligned, right? So once we know that, okay, all the stars are aligned, there's a high chance it's going to bounce up, then we place our entry order. So you can see here, I put my entry order 1 to 10 cents above the candle pattern. So now it depends on the stock price. So like this stock price is $300. So I'll use probably 10 cent or 20 cent. So I'll place my buy order about 10 cent above the high of this bullish candle. Why? Why do I put the buy order above the high? Why? So that the next day, if the price goes up, it would trigger the order and I'm in the trade. But the next day, if the price doesn't go up, if the price goes down, it will not trigger my order. That's why it's important that you place the buy order above the high of the candle. So we use a buy stop order, a buy stop limit order, right? Now, so this is the entry rule of getting in, but you always need to have exit rule of how to get out. People always think how to get in, they don't think how to get out, right? So After you enter, there are only two scenarios. Either the price goes up, or after you enter, it goes down. It could still go down, right? So what's the exit rule? So the exit rule is that I will put a stop loss 1 to 10 cents below the swing low, which is here. So I'll put a stop loss somewhere here. So if it goes down, I will cut loss over there. And I will lose 1 hour, okay, or 1% of my money, right? But if it goes up, then I'll have a profit target up there. So I take profit at 2R, or get 2% of my money, or double the risk, right? So let me show you in more detail right now. By the way, this stock I'm talking about is ULTA, ULTA, and I took this trade about 2 weeks ago, right? And in fact, when I took the trade, I posted it on my Telegram chat group for my students, right? So the great thing is that we have got this Telegram chat group community, and it's not just me that posts trades. All the students are encouraged to post trades every day. So whoever sees a good trade, they post a trade, and then we share trades, and they get feedback on other from other members and myself. Like I say, okay, yeah, this trade meets the rules, doesn't meet the rules, and all that, right? So you can see this was posted here, and when I post a trade, I explain, right? Just spotted the outer for trend retracement setup, finding support at the 100 moving average with additional horizontal support. Williams are oversold at the recent swing low, plus a bullish engulfing candlestick pattern, blah, 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 right? All right. You can only join my private Telegram group only when you have taken the course, right? So you must take the stock trading course or the options course, the full course, and then you get into our private Telegram group, because we can only let you in. We can only let you in when you have learned all the lessons. When you understand all the lessons, then you can get in and discuss intelligently. If you don't learn the lessons and you go in and like, what you're talking about, right? And like this Angelica who took the trade says, thanks, Adam. I made 1,000 on Alta on this trade. Okay. So let me show you again the details of this trade. So again, this is the same trade, but I have made it bigger. So again, the first thing is my buy order. So in this example, I put my buy order at 373.8, which is 10 cents above the high of the bullish candle. I then put my stop loss 10 cents below this swing low pattern, which is 354.8. So I'm buying at 373. My stop loss is at 354. What is my risk per share? What's my risk per share, guys? What's my risk per share? $19. That means every one share I buy, I'm risking $19 if it hits the stop loss. Agree? So we call that the 1 hour distance. R represents risk. Now, if I'm risking 1 hour, how much do I want to make? How much do I want to make? I want to make 2 hours, for example, right? So 1 hour is $19. What is 2 hours? 2 hours is $38. So I put my profit target $38 above my entry. So 373.8 plus 38 gives me a profit target of 411.8. So that's how you set up your trade. Now, the most important thing next is position sizing, which is calculating how many shares to trade. So how? So let me show you the process. So how do you size your position? Now, so let's say, for example, your capital is $10,000 right now. This is called your net liquidation value. And before you start trading, you must decide on your risk per trade. So in this example, you decide to risk 2% of your capital per trade. Now, let me say something. Your risk per trade has to be consistent. So if you decide on 2%, you must always use 2%. If you decide 1%, you must always use 1%. You cannot change from trade to trade. You can't say, okay, this trade, I'm more confident I'm going to risk 3%. This trade, I'm going to risk 1%. No, you can't do that. You know why? Because you never know which one will be a winning trade, which one will be a losing trade. You don't know. It's random. So you got to be consistent. Okay? All right. So let's say you choose 2% risk per trade. Now, what's 2% times $10,000? What's 2% times 10,000? Guys, tell me. 2% times 10,000, what's that? $200. Very good. So in other words, the maximum loss you should get is $200. Okay, I repeat, the maximum loss per trade is $200. Okay, now listen carefully. If your total loss is 200 and each share you're risking $19, how many shares can you buy? You take $200 total risk, divide by $19 risk per share, you get 10.5 shares. Now you can't buy 10.5 shares, so let's round it down to 10 shares, right? So now you know you buy 10 shares. Simple. Okay. Now, so if you buy 10 shares and each share is 373, that's $3,738 for this trade. Okay. So this is your position size. Now, let me ask you a question. Is this your risk? Is 3,700 your risk? No. What's your risk? Your risk is $200. So your position is not your risk. Remember that your position size is not your risk. Your risk depends on where you put the stop loss. Got it? Okay. So, question. If this turns out to be a losing trade, okay, if it happens to be a losing trade, how much do you lose? You lose $19, right? Times 10 shares. So what's $19 times 10 shares? You lose 190, which is close to 200, right? Because we have to round down, yeah? If it's a winning trade, you win $38 times 10 shares, you win 380. You got that? So now what is $190? $190 out of 10,000 is about 2%. Well, it's 1.9%, right? But let's round it to 2%, something like that, right? So this represents 2% of your capital. But if it's a winning trade, you win 380 out of 10 grand. That represents 4% return on your capital. Do you see how this works now? You risk 2% of your capital to get 4% return, or 1% to get 2%. Okay, great. Okay, so next, you don't have to calculate all this yourself. So when you take the stock trading course, you'll be given all the software that we use. And one of the software is called the position sizing calculator that calculates everything for you. So let me show you how this works. So this is the calculator. Let me open it up. Okay, there we are. This is the calculator here. So what you got to do is to put in your capital now. So let's say your capital is 10,000. Okay, and you're risking 2%. Okay, and you key in your entry price. So what was our entry price again? What was our entry price? From the slide, entry price was 373.8, right? Correct. And our stop loss 354.8, 354.8, and our profit target 411.8. Right? So you can see once you key in all these numbers, immediately it'll tell you, hey, you buy 10 shares, 10.5. Ta-da! So it makes it very simple. All right. So every time before you take a trade, use the position sizing calculator, put it in, and you're done, right? And you know that you are risking 2% of your money to get 4% of your money back, right? And of course, all the software comes with the stock trading course. Yeah. Okay. Now, so what I'm showing you now is how to trade stocks, how to trade the stock itself. But question, what are the limitations of trading the stock itself? What limitations are there? Well, the first limitation is you need a more capital, right? Because again, in the previous example, we had to buy $3,700 worth of shares to make $380, correct? So we had to come up with a lot of capital in order to make that $380, right? So that's the problem with trading stocks. You need more capital, okay? The other limitation is that there's a risk of gapping below the stop loss. Now, how many of you have experienced this? How many of you have experienced you put a stop loss, but the damn price gap the next day or a few days later, the price gapped down below the stop loss because of bad earnings or some event, and you ended up losing more than what you wanted to lose? Who has experienced that before? Right? So that is the risk of trading stocks. The stop loss is not guaranteed to help you. If it gaps below, you're screwed. Okay? The second limitation of trading stocks is that you can get easily whipsawed by manipulators. What does it mean by whipsawed? Again, who's experienced this? You buy there, you put a stop loss there, and right after you buy, the market makers, the manipulators, the algos, they drive the price down really quickly, hit your stop loss, you get stopped out, you sell there, and then it goes up to your profit target. You go, ah! It's like, someone came to your wedding and took your bride and ran off with the bride, and then you got stuck with the wedding bill. Who's experienced that before? Right? Done it, right? Yeah, so that's another limitation of trading stocks. But the main limitation of trading stocks is that to make money, the price must go up, right? The price must go up to make money. If the price doesn't go up, if the price goes sideways or goes up too little or goes down, you lose money, you lose money, you lose money. So in other words, you have to be right on the direction. And that's why nowadays I don't trade stocks directly. I use the stock trading course to identify the trade setup, but I execute all my trades with options. I execute all my trades with options. So instead of using the normal rifle or the M16 to shoot the enemy, once I've identified the enemy, I use more powerful weapons like the Uzi, like a shotgun, like a submachine gun, like a grenade launcher. So I make sure that the enemy gets killed more effectively, right? So how do I execute with options? Okay. Now, first of all, let me just tell you the main advantage of using options to trade is that you use a lot less capital. You use a lot less capital, and hence it increases your return on capital. Okay. Now, some of you may think, hey, Adam, are you saying that I should buy call options? If you go to Wall Street bets and you notice a lot of these millennials, right? They trade by buying call options. I'm just curious, how many of you have done this before? You bought call options because you thought it's cheaper. And you thought with a call option, I've got unlimited reward and I have less capital, right? Okay. Now, one of the things that you must understand is this. As professional traders, we very, very, very rarely buy call options. In fact, let me tell you something. Buying call options is a losing game. It's a losing game. Once in a while, you can make a lot of money. Yes, you can. Luck. But most of the time, you're going to lose money, right? Because buying a call option is like a lottery ticket. You win once in a while, but all the rest of the time, you're going to lose. And whatever you make, you're going to lose everything to the market. Who's experienced this before? Who's experienced this before? Right? Why? So why are buying call options not the right way to trade options? Because a few reasons. Number one, when you buy a call option, it is very expensive. And for you to make money, the stock price must go up enough to cover the cost of your option premium before you can make money. Right? So in other words, to make money on call options, the price has to move enough. Okay? If it moves a bit, you still lose money. It has to move a lot to cover the cost of the option. Number two, to make money, the price has to go up, right? If the price goes sideways or goes down, your calls will become worthless. And the problem is when you buy call options, they lose value every day because options are decaying assets. Every day it loses time value. So slowly and slowly, you're losing money every day until it expires, okay? So when you buy a call option, to make money, you must get three things right. Number one, you must be right on the direction. The price must go up. Number two, it must go up enough. And number three, it must go up in time before it expires. And this is very, very difficult. That's why it's a lottery ticket. Most of the time, you will lose money in the end. Okay. So what is the proper way to trade options with very high win rates? The way to do it, and the way I do it, and the way Bang does it, who's my options grandmaster, all right, is we use option strategies that are non-directional. Yes, so most of the time we use non-directional option strategies. What does that mean? That means to say, we don't need the price to go up to make money. Even if the price doesn't go up, if the price goes sideways or the price goes down slightly, we still win. How? So I'm going to show you in a while. So take lots of notes and pay attention, right? Number two, I like to use option strategies that do not get exposed to time decay. That means every day that passes, I'm not losing value on my options. In fact, every day that passes, I want to be paid from the options. Okay, and I'll show you how that's done in a while, right? So by doing that, we are able to use options to increase our win rates significantly and to increase our consistent profits, right? So you may say, Adam, so what strategies do you use? Now, we have many, many strategies. So in the options trading course, we have got level 1 and level 2. We have got the Iron Shell, which is level 1, and Iron Striker, which is level 2, right? So in the options course, we teach over 18 strategies on options. And many of the strategies you can't learn anywhere else. You can't read it on any book. You can't get it on any website. You know why? Because they were invented by Bang Pham Van, who is my options grandmaster, and some of them were invented by me. So a lot of them are proprietary strategies that we created. Okay, not all of them, but some of them. Okay. So for example, these are some of the strategies that we use. All right. You have got the bull call spread. We have got credit spreads. We have got the protective bullish synthetic known as the bull bang. This was invented by my partner. We have got diagonal spreads. We've got calendar spreads. So these are all the different types of option strategies. Okay. Now, again, you may say, Adam, why so many different strategies? Okay. Because you use different strategies under different market conditions. Okay. So again, let me use an example. Let me give you an analogy, right? So when you learn stock trading, you learn how to find the trade setup. It's like you learn how to spot the enemy. You learn how to aim at the enemy, right? But what weapon do you use to execute the enemy? So if you just buy the stock, it's like you're using a pistol. Yes, you can kill the enemy, but it's not so powerful, right? But imagine, instead of a pistol, now you have a shotgun, right? So a credit spread is like a shotgun. You know how a shotgun works? A shotgun is like, boom, it sprays a lot of pellets. And the great thing about a shotgun is you don't need to be accurate. Because it sprays a lot of pellets, it will kill the enemy even if your aim is bad. Follow what I'm saying? So that's what I love about credit spreads. I'm going to show you an example in a while how we use a shotgun style where you don't need to be accurate and you still kill the enemy. You still get a winning trade. All right. Or you can use a bull call spread, which is like a pistol, but now with a silencer. So the enemy doesn't hear you coming. Or if the enemy gets shot, it won't alert other enemies to kill you. Right? Okay. And then one of the most popular strategies is called the bull bang. This is like using a freaking rocket launcher on the enemy to blow the bastard up really fast, right? And then we've got diagonal spreads and all that, right? So that's the analogy I give, right? So would you like to learn some of this and see how it works? Okay, so let me show you one of my favorite, which is called a bull put spread, which is a kind of credit spread. So let me go to my charts and show you an actual example. Okay. So let's look at JP Morgan. Okay. And if you look at JP Morgan, for example, let me just put in my indicators. Just give me a second. Okay, there we are. Okay. Now, let me just remove the Bollinger Bands because that makes it a bit messy. Okay, there we are. Now it's cleaner. Okay. So first question, is this on an uptrend? Do we have an uptrend? Yes or no? Yes, because the 20 is still above the 40. The 50 is above the 150, right? Okay, good. Now, next question is, do we have the moving average being supported, right? Now, take a look at this, right? Wave up, wave down, wave up, wave down, all right? So you can see it's finding support. Now, initially it went up, but because of the COVID Omicron, it gapped down, right? But it's still holding at this moving average. The orange moving average is the 100 moving average, right? Over here. So is it being tested? Okay. Yes. Okay, next. Do we have a bullish candlestick pattern? Do we have a bullish candlestick pattern? Yes, we do. This is called a bullish pin bar. We call this a pin bar. So even if it's a bit red, it's fine because it's got a long shadow, small shadow on top. It's called pin bar. So unless something else crazy happens later, and we get another crazy news, based on the technical pattern, we do have a chance of bouncing up. Again, it's not a guarantee, all right? It's not a guarantee, but a chance going to bounce up. And again, we have got the Williams R. Well, it's actually not totally oversold yet, actually. But we'll take this as an example, right? Okay, so based on all this, let's say you believe that the price has a chance of going up. Now, again, if you buy the stock, then you need the price to go up to make money, correct? But I don't want to buy the stock. I want to use options so that even if the price doesn't go up, even if the price goes sideways or the price goes down, I also want to make money. So I'm going to use a bull put spread. Let me write this down, okay? I'm going to use a bull put spread strategy. So what the heck is a put? Okay. Now, again, I have to assume that you know a bit about options, okay? Because I don't have time to teach the basics of options here, although when you take the course, we'll teach from the basics. But I have to assume that you know what are options, right? Okay, so what's a put option? Now, remember, guys, when you buy a put option, you have to pay money. When you sell a put option, you collect money. Always remember that, okay? I repeat. When you buy a put option, you pay money. When you sell a put option, you collect money. Okay. Now, when you buy a put option, you have the right to sell the shares at the chosen strike price. You have the right to sell 100 shares at the chosen strike price. If you sell a put, it's the opposite. When you sell a put option, you are obligated to buy 100 shares at the chosen strike price. Okay, now, so this is what I'm going to do. The first thing I'm going to do is I'm going to sell a put option at 150, somewhere here. Ding, ding. Okay, now you may say, why 150? Okay, later I'll tell you why, but just take 150 first, all right? Okay, so I am going to sell a put option at the 150 strike price. Now, again, when I sell a put option, what do I get? What do I get when I sell a put option? I get premium. I collect money, right? Okay, good. So I get money. Yes, money, all right? But once I sell this put option, what happens? I'm obligated to buy 100 shares of the stock. But you may say, I don't want to buy 100 shares. I don't want to do that. So what must you do? So in order to get rid of the shares, if you have to buy them, then I will now sell, or rather I will buy another put at 145. At 145 strike price, I will buy another put option. Now, when I buy a put, I have to pay money, right? So I'll pay money here. But the good news is the money I collect from selling the put is more money than the money I need to pay for the put. So I collect more money here, I pay less money here, I will get a net credit. I get a net credit. So in other words, by entering the trade, I get paid money to enter the trade. Not I pay, I get paid. Okay? That's why we call it a credit spread. Now, again, by selling this put, what happened? I'm obligated to buy 100 shares at 150. But if I don't want the shares, then by having this put I bought, then I have the right to sell the shares at 145. So I have to buy the shares, I sell the shares, I can get rid of the shares. So this is what we call a hedge trade, a hedged trade. Okay. Now, once I have entered the trade, what does this mean? What does this mean? Now, again, if you're a bit confused at this stage, like what the hell is he talking about? Don't worry. Just understand how it works. Okay, so this is how it works, right? Once I enter the trade, if the price goes up, I make money. If the price goes sideways, I make money. Even if the price goes down, I make money. The only way I can lose money is if the price drops below 150. I repeat, I can only lose money if the price hits or goes below 150. Then it's a losing trade. But as long as it stays above 150, I will win. It'll be a winning trade. So in other words, I have a very, very wide profit zone. Understand? Okay. So let me show you how I will execute this trade. Okay. So what I'm going to do is I'm going to go to the option chain, all right? And I will pick a date to expiration. So normally for this, I will choose about 30 to 45 days for the options to expire, okay? So I'm going to choose 7 January, expiration, expires in 39 days, okay? So I'm open it up, boom, okay. Now, so I'm going to be selling put options, right? Okay, let me just put this to 50 first. Okay, so again, I will sell a put option at 150. Why? Now, look at this thing called delta. Look at this thing called delta. I want to sell a put at a delta of about 20 to 25. All right, 20, just write this down, right? 20 to 25, right? So what's the closest? Closest is 22. You see 22 there? You say, what does 22 delta mean? What does it mean? Okay, I'll explain what it means later. Just write it down, okay? So at 22 delta is the 150 strike price. Can you see that? So I'm going to sell this guy. I'm going to sell this sucker. Now, When I sell this, how much money do I get? How much money do I get? I will get $2.43. Can you see that? I will collect $2.43 per share. Okay. Now, so I'm going to sell 150. Okay. And I'm going to buy the next strike below. So what's below 150? Below 150 is 145, right? So I'm going to buy the 145. I'm going to buy the 145 put. And by buying this put, I will pay $1.60. Can you see that? So I collect $2.43 by selling this guy, and I pay $1.60 by buying this guy. So net, I get, is it 80 something cents? Okay. So let me enter the trade. Let me show you how it's done. Okay. So I'm going to sell the 150 here. Boom. And buy the 145. Boom. Okay. So there you go. I get a net credit. Can you see the word credit here? That means the money will be credited to me when I enter of 82 cents. Now, each contract is always 100 shares. Okay. Each contract of options, one contract is always 100 shares. So 82 cents times 100 is $82. Understand? So every contract that I enter, I will get $82. Now, if I enter 10 contracts, I'll get $820. If I enter 100 contracts, I'll get $8,200. So it's up to me how many contracts I want to enter. Understand? So for this example, I'm just going to enter one contract and I'll get $82. So this $82 is my maximum profit I will get. Okay. Now, you may say, Adam, that sounds great, but what if it's a losing trade? Okay, we'll come to that in a while. Now, let me show you the chart here. Wait, before that, let me show you this chart again, right? So what I've just done is, again, I have sold the put here and I bought a put here. Okay, and I've collected $82. Right? Okay. So like I mentioned, right, as long as the price doesn't drop below 150, I will keep this 82 bucks. Right? So the price can go up, price can go up a bit, price can go sideways, price can go down. I don't care. Right? I've got a big profit zone. Now, if it goes below 150, I lose money. Now, what is the chance that you'll go below 150 and stay there? What's the chance that the price will drop below 50 and stay there? What's the chance? Remember, I showed you delta just now. What was the delta? What was the delta of 150? What was the delta of 150, guys? The delta was 22, right? So what does this mean? This means that the chance of the price going below 150 and staying there is only a 22% chance. That means I've got a 22% chance of losing money on this guy. So what's my chance of making money? My chance of making money would be 78%. It's a 78% win rate. So why I love this strategy is got a win rate of 70 to 80% win rate. And again, this is not something I'm guessing. It is mathematics. It's statistics that I'll win 78% of the time. All right. Now, some of you may say, but are you sure that delta 22 means you can only lose 22%? Are you sure? Yes. In fact, if you look at this research done by Tasty Trade is one of the top options trading platforms next to Thinkorswim. And they did actually a research over 12 years of data, right? And they found that, for example, if you sell the put option at 30 delta, okay, you only have a 20% chance of losing money at 30 delta. But I sold at 22 delta, which means my chance of losing money is even less than 20%. Okay. So it's been mathematically proven. All right. So it's not something I'm pulling out of my ass. Right? It's a fact. All right. Okay. Now, then the next question you may ask is, Adam, so if it drops below 150, how much do you lose? How much do you lose? Okay. Now, let me click on this and show this to you. Okay. So you can see that I collect $82, right? Okay. But if it drops below 150 and I let it expire worthless, I could lose 400 bucks. Now you may say, Adam, are you nuts? Right? You get $82, but if you lose 400. Are you crazy? I'm not crazy. Now, you can only lose 400 if you let it expire. You never let it expire. You exit early the moment it hits that strike, and you will not lose 400. So let me show you how I manage the trade. So in these options, you have to manage the trade really well. Okay, so let me show you how it's managed over here. Okay, all right. Now take a look at this. Okay, this is what we call the profit and loss graph. Let me make it a bit bigger for you guys. Okay, this is called a profit and loss graph. Now, on the y-axis, you can see this is 0, right? Anything above that is profit. Anything below that is loss. On the x-axis is the stock price. So right now, the stock price is here. Correct? So the stock price can go up, the stock price can go down, or it can stay where it is. It can go sideways, right? Now, can you see this green line here? That green line is my profit and loss at expiration. Now, this option expires on the 7th of January, which is in about 39 days. All right. Now, what's the date today? The date today is the 29th. Let me change this to 29. Okay, it's the 29th of November. Can you see 29th of November here? All right. Now, notice when I go to the next day, 30th of November, 1st December. Now, notice what happens to the purple line. The purple line is the profit and loss today. Now, notice what happens as I shift the day. What happens to the purple line? What happens to the purple line as I move to expiration? What happens to the purple line? The purple line will move to the green line. Can you see that? So the green line is expiration day. This is today, right now, the purple line today. Tomorrow, the next day, see, it goes to the green line. Can you see it will go to the green line? Can you see that? Okay. So if I enter the trade right here, okay, and if the price goes up, the price doesn't move, or the price goes down, and I hold it to expiration, I will get the maximum profit, which is $82. And this has a 78% chance of winning. But if the price crashes to 150, I will lose money, right? But if it goes all the way to 150, okay, and I cut loss here, how much would I lose? How much would I lose here? Okay, now look at this box. Can you see the purple line? Can you see this purple line? What does it say here? What does it say? Can you type the answer if you can see it? 114, okay? So if I cut loss here, I will lose 114, right? So what is 114 divided by 82? 114 divided by 82 is about 1.39, right? So in other words, I am getting a $1 profit, But if I lose, I'll be losing about $1.39. Let's make it $1.40. Can you see what I'm saying here? So I'm risking $1.40 to make $1. Now you may say, but Adam, why would you risk more to make less? Because I have a 78% chance of being right. So it doesn't matter. Okay. So let me show you the maths. Okay. Let's assume that I forgot to change the date back. No, it doesn't matter. Okay. So let's say now the thing is this, it won't drop immediately. Okay. Now notice as the time passes, it will go up, right? So usually by the time it drops, I will lose about $1.40, $1.50. Okay. So let me show you how this works. Okay. Now, if out of 100 trades, now let's say I get a 75% win rate. Let's not talk about 78. Let's say 75%. That means I'm going to win 75 trades and I'm going to lose 25 trades, right? Now, each time I win, I will win $1. And each time I lose, I will lose, let's say, $1.50. So this is $75, and 25 times 1.5 is $37.50. So with the winning trades and the losing trades, question, is it a profitable strategy? Yes or no? Yes. So before you trade a strategy, you have to do the mathematics to ensure that it's a profitable strategy. So this is one of my favorite strategies called the bull put spread. In fact, if you take a look at my trades, let me show you. Right? You can see that the majority of all my trades which I enter are bull put, bull put, bull put, bull put, all bull put. Right? This is my favorite. Why? Because I have got an 80% win rate. In fact, I have got another version called the bull put spread extreme, which you'll learn in the course, right? That one has a close to 90% win rate. The 90% win rate. So very high win rate, very consistent, and that's how I'm able to generate very consistent profits. Now, this is just one strategy. Okay, there are many other strategies. Another strategy is called the diagonal spread strategy. Okay, so for the diagonal spread strategy, one of my other students, he loves to use that one. And we're going to play his video right now and let you hear from him. It's about 3 to 4 minutes on how he trades the diagonal spread, which is a different strategy, but very similar. So this is Liu Wan Mingjie. Own favorite option strategies that they use to execute their swing trading. So I'd like to introduce one of my students, Liu Wan from Singapore. So all my students have their own favorite option strategies that they use to execute their swing trading. So I'd like to introduce one of my students, Liu Wan from Singapore. And Liu has been trading now for about 2.5 years after studying from the Piranha Profits. And out of all the strategies that he focuses mainly on diagonal spreads. So he identifies the trade setup, and instead of buying stocks, he buys diagonal spreads. So Liu, I'm just curious, why do you use diagonal spread options to execute your trades?
Firstly, it requires less buying power when I'm using options, because if I use the shares, if I use the account to buy the shares, it will definitely require higher account size. Then next is for diagonal trade, I do not need to know where the stocks is going sideways or slightly go up or go down. I'll still make money because of my positive theta. And lastly, is definitely a good win rate of more than 60%.
Okay, so let me just explain to the audience what is positive theta. What does theta mean, right? So theta is a word in options where every day that passes, your options lose value. And when you do a diagonal spread, that actually benefits you. Because in a diagonal spread, you tend to sell options that are short dated, that lose value. And as they lose value, you maximize the premium that you collect, right? So in other words, time works in your favor. So as time passes, even if the stock doesn't go up, goes sideways, goes down a bit, you're still making money. Is that correct, Leo?
Yes, that's right.
All right. So Leo, you have a full-time job as a social media analyst, right? How long does it take you to trade options on the site every day?
Usually I take about half an hour, right? Because we live in Singapore, so my full-time work starts in the morning to evening. Then after that, the stock market is open at night hours, so it doesn't affect my job at all. And during at night, I just take about 30 minutes to 1 hour, 1 hour to check the market itself.
Okay, so 30 minutes to 1 hour, and it's able to create an additional income stream for you, I guess.
Yes, that's correct.
All right. Would you say it's worth the time?
Definitely worth the time.
Okay. All right. So Leo, how are your trading results so far this year?
Yep. Let me just share my screen so that I can share with you my account.
And how many trades have you done so far this year?
Yes. So far, to date, start of the year to date, I have done about 80 trades, and most of them are actually diagonal trades. And in my trading account, year to date, my profits is about 59K, and with an account size of currently is 110K. So started off
111,000 now.
111,000,
Yeah.
correct? Yeah. So actually, my account size started at about 51K and 52K, and profited 58K till now. So that translates to about 115% throughout the 11 months, and that would be approximately about 9% per month itself.
All right, great. Actually, it's less than 11 months. It's about 10 months and 1 week.
Yeah.
All right. So getting 9% return a month on average for year to date, making $58,000 in net profit. Great. And what's your average win rate for this strategy?
My average win rate for the calendar, for the diagonal spread itself, is about 65% win rate.
Okay, great. And if you're interested to find out more about the details of how Leo trades and his strategy that he learned from Piranha Profits, you can actually check out the showcase on our Black Market website, where there will be a more detailed sharing video where Leo shares his trading routines and his entry and exit rules. So check it out on the showcase at the Black Market website. Thank you, Leo, for sharing.
Thank you, Adam.
Okay, so I hope that was inspiring, right? And again, if you want to actually listen to my full interview with him, it's about half an hour. That's the full interview. You can go to blackmarket.piranhaprofits.com. Under showcase, you can watch the full interview where he actually shares his entry rules and his exit rules. So you get to see the actual mechanics of his strategy, which he's learned from Piranha Profits, right? So again, there are many, many strategies, and all our students have their own favorites. So like he loves diagonal spreads. I love credit spreads. And some students, they love the bull bang strategy, all right? Or the synthetic long strategy, okay? So showing you my trading account. So I've got two accounts. One of them is my joint account with my wife. So she can use the money for shopping if she wants to at the end of the year. And you can see this is from January this year to November 12th. I've not updated it since then, all right? But so far it's been the first 10 months of the year of trading. You can see my unrealized profit. This is from my investments, right? My investments. And the realized profit is from my short-term trading, right? So for the first 10 months, I'm up $149,000 US, okay? And to generate the 149,000, I used about $240,000 of capital from this account. So that is roughly about 6.2% return a month. Okay, slightly above 5%, right? And my average income, if you divide this by 10 months, it's about $14,000 from this trading account. Now, some of you may ask, how come Leo is getting 9% higher return than you? Well, it's because he actually takes a bit more risk, right? He has a higher risk per trade, and I use a lower risk per trade. Okay. I'm going to defend myself. So this is my other trading account. This is my own one, right? My Adam Khoo trading account. This one, you can see total, again, January to November, I've made 360,000 over here, 360. And that's about 36,000 a month out of 400,000 of capital dedicated. So that's about 8% a month. So this one, slightly higher returns, right? So these are many of my other students. If, in fact, again, go to blackmarket.piranhaprofits.com. Under showcase, you can hear a lot of my student interviews, and you can listen to Mari's interview. Mari is an American Japanese, right? She lives in the US, and she's now a full-time trader. And you can watch the entire, I think it's about 20-minute interview with her, where she again shares how she trades, right? And they've been very generous to share their results with the public because they are really inspired to get more people to join and to, join the community and all that. So she says, I've been trading for years, but I only knew single call and put options. I was making a lot of money. Then I lost almost all my profits. After that, I made more money. Then I lost profits again. I was just going around in circles. And that's what happens to a lot of traders, right? They make money, they lose money, and they go in circles for years and years because they don't have a trading edge. They don't have a statistical edge. They are like gambling. They are not treating it as a business. After I joined Piranha Profits in 2020, I studied so hard to master option strategies, and under Bang and Adam's guidance, I'm making consistent profits with confidence without stress. Now I can sleep through the night. Every day, I'm so excited to trade and invest without any fear. This year alone, in 1 month, right, I'm up more than $35,000. Money is good, right? And this is the account that she has. And then we have got Olivia, who's from Singapore. She's a chartered accountant. And, before she came to my course a year and a half ago, she was a very, very conservative person, right? So conservative that everything was in a fixed deposit. She didn't even dare to buy stocks, okay? And when she took the course, and she realized that, yeah, there's a way to invest and trade without the risk of losing money if I've got a trading system, if I've got an investment system. And today, she's one of our community's top options trader. Someone who knew zero about stocks a year and a half ago is now a top options trader. And since she started, she has posted her results every month without fail. And so far, she has had, you can see, never had a losing month, right? In fact, her worst month, she made $400. That's her worst month, right? And she made 4,000. And this month alone, she's up like $7,000. And this is extra income because she also has a full-time job as a chartered accountant. And trading is now her additional source of income, right? She says here, dear Adam and Bang, it's time to register. A big thank you to you. Every month is difficult month as stock market is always volatile. But with your guidance and patience, I'm happy able to generate 4,500 from the choppy market this month, right? I love option strategies that work were covered calls, cash secured puts, calendar spreads, and all those things, right? And then we have got this other student. Hi, Bang and Adam, sharing my year-to-date result. No words can express my gratitude for all your guidance and teaching to make this happen, right? My favorite strategies are bull put spread, which is what I showed you, bull put spread extreme, and earnings probability spread. And he's up 89% for his first year, right? It's Mutahir. Mutahir, you can watch his full video interview in the showcase as well. And he's a guy who makes also, $10,000, $20,000, $30,000 a month now trading, right? So again, in the options course, you're going to learn over 18 powerful strategies that allow you to profit under any market condition with any asset. So you don't only trade options on stocks. You can trade options on Forex, currencies. You can trade options on commodity futures like oil and natural gas. You can trade options on gold, options on silver, options on ETFs, options on index. So you can trade options on anything, all right? So why do we teach so many strategies? Because see, options are like it's like a Swiss Army knife where you can pull out almost any tool to open any can or any situation, right? So for example, if the market is now moderately bullish, that means you think it's going to go up, but you're not sure it's going to go up. Like it's like moderately bullish. Then you use bull put spread extreme, or cash secured puts. But if the market is very bullish now, it's like going up very strongly, you use a bullish synthetic bull bang, a bull call spread, or a callback ratio for a very strong market. By the way, do you want me to show you one of this? Would you be interested to learn another strategy right now? Okay, so let me show you another strategy, which is more bullish, right? So earlier when I showed you the credit spread, notice some of you would say, but Adam, this strategy, yes, you make money when it goes up, you make money when it goes down, you make money when it goes sideways. You don't have to make money when it goes up. But Adam, your profit is limited, right? You only make $82 per contract, limited. Adam, what if I believe that the stock is going to the moon and I want unlimited profits? Should I use this strategy? No. Then you use a different strategy, okay? So I'm going to show you another strategy with a different stock. Now, so I managed to find this interesting trade, which is ARK-F. This is the ARK Financial ETF. So this is an ETF actually. And it happened to display what we call a slingshot pattern. A slingshot pattern, okay? So a slingshot is one where the price is oversold. You can see it cut the lower Bollinger Bands and the stochastics is oversold, right? And you can see this is what we call a double bottom pattern, a double bottom. So there's a high chance that it's going to bounce back. Again, it's not a guarantee, okay? It's no guarantee, but there's a high chance it's going to bounce back, all right? Now, you may say, Adam, if I think it's going to bounce back, why not just buy the stock? Yes, you can buy the stock. How much would it cost to buy the stock? Now it's $47. If you buy 100 shares, how much would it cost you? If you wanted to get exposure to 100 shares, it will cost you $4,749 in capital, right? Which is almost $5,000, right? So is there a cheaper way of doing it? Is there a cheaper way of doing it? Now, you may say, yes, I can buy a call option. But I told you, buying a call option is not a good idea because it is very expensive. So for example, if you buy a call option, let's see how much it will cost, okay? Hold on, why is it not loading? Okay, now it's loading, great. Give me a second, let me close this. Okay, so assume that you think it's going to go up in 30 days, yeah? And you want to buy a call option here, right? So if you buy a call option at the money at $47, how much money would it cost you? Right? If you buy a call option at a 47 strike price, it will cost you about $3. Can you see that? It'll cost you $3 to buy this option. So what is 47 plus $3? $50, right? My brain is not working today. $50, sorry. What's wrong with my brain? Okay. So in other words, for you to break even, the price must go above $50 to break even. So even if the price goes up from 47, right? But if it doesn't go up enough, you still lose money. Okay. And it's going to cost you $5,000 to buy this if you buy the stock. So let me teach you an easier way to do this, a cheaper way to do this, right? So I'm going to use a strategy known as a synthetic spread. A synthetic spread, okay? So this is what I'm going to do. I'm going to select this one. Just give me a second. Yep. Okay. Now, what I'm going to do is this. I'm going to buy a call option and sell a put option at the same time. Why? Let me explain why. Okay. Now, first of all, I'm going to buy a call option, okay, at the $49 strike price. I'm going to buy a call option at a $49 strike price. Now, again, if I buy this call option alone, it's going to cost me $2.35, right? So in order to pay for this, I'm going to sell a put option at 46 strike price. Because again, when I sell a put option, I collect money, right? So I sell this put option, I collect $2.15. And with this $2.15, I can pay for most of this $2.35 and I get almost a free trade. Ta-da! Okay, so let me show you how it works. How do I get almost a free trade, right? Okay, so I'm gonna buy the 49 here and sell the 46. Boom. Okay, so notice by buying the call at 49 and selling a put at 46, instead of paying money, I get a credit. I get paid money now, and I get paid 5 cents, which is $5, right? For 100 shares, okay? Now, what does this trade look like? What does it look like? Let me show you the profit and loss graph. Ready? Go. So this is what it looks like. So again, this is the zero line. Remember, anything above that is profit. Anything below that is loss. So right now, the price is here. I anticipate it's going to go to the moon, right? So now you can see what happens. The higher the price goes, if the price goes to 50, 51, 52, 53, right? It goes up, right? My profit goes higher. So I've got unlimited profit. Let me write this down. I've got unlimited profit. But Adam, what if it drops? What if it goes down? Yes, you need to think, what if it drops, right? Now, the great thing is this. Right now, the price is here. Notice, if the price drops, even if the price drops all the way to 46, what happens? Notice that the green line is the expiration. I break even. We call this the break even. Can you see that? So I've got a very big break even zone. So the stock can drop all the way here and I'll not lose money, right? So I've got unlimited profit, but I've got limited risk here, right? Now, of course, if it drops here, then I could lose money, right? I could, of course, lose money here. That's why once it drops somewhere here, I will cut my loss so that I lose very little, but I make a lot of money. And how much do I pay? Zero. How much do I get? I get $5. Cool. Now, having said that, it will block your buying power. All right. It will block your buying power, although you don't actually come up with the money, but it will block buying power of that buying power is 999, which is $1,000. Oops, sorry. Yeah, 999 is $1,000. So, in other words, in your account, it will take up $1,000 of your capital as collateral. So instead of coming up with $4,700, you only need $1,000 in capital. So it requires less money, unlimited profit, and big break-even zone. So, question: is this a good strategy? What do you think? You guys like this strategy? Okay. Great. So again, what I'm sharing with you today is really less than 1% less than 1% of what you're going to learn in the option courses, because there are over 18 strategies, advanced strategies. It's just one of them. Okay. So what if the market is very bearish? What if the market is going to crash next year? The market is going to collapse. Good. We can make money as well by using a bearish synthetic, by using a bear put spread, by using a put back ratio. What if we are not sure if it's going to go down? We are a bit bearish, but we're not sure. We use a bear call spread. What if the market goes sideways? It goes nowhere. Can we make money? Yeah, by selling covered calls, by using diagonal spreads, by using calendar spreads, by using snipebacks and iron condors. There are so many ways to make money when the market goes nowhere, right? Now, what if there's earnings? What if there's an FOMC meeting, special events? We can use the earnings sniper spread or the earnings probability spread. So, there's a way to make money in any situation. So when people ask me, Adam, are you concerned where the market's going? I don't care. The market goes up, we make money. Market goes sideways, we make money. Market collapses, we make money. We just have to know what's the probability and then execute the strategy to benefit from that probability. Okay. So why do I love trading as a business? Right now, I've done a lot of businesses. I used to have a disco business when I was younger. I used to own a mobile disco business, an event management business. I used to be in an advertising business, a children's education. I've been in all kinds of businesses. And out of all of them, trading is my favorite business. You know why? Because trading is the only skill that can guarantee you an income for the rest of your life. It's the only skill. I mean, nowadays, even if you go to the top universities, Harvard, Princeton, Oxford, right? And you get the best degrees, the master's, the PhD, that piece of paper can only guarantee you your first interview, not even your first job. It just gets you an interview. But whether you get hired, whether you get promoted, how long you're going to last has got nothing to do with that piece of paper. And you spend 30, 50K, 100K on your formal university college education, and it can't even guarantee you an income for the rest of your life, because you can get replaced by someone younger or cheaper or faster, right? But when you learn how to trade the financial markets, then anywhere in the world, as long as you got a laptop, you got internet connection, you can generate income for yourself, and no one can take this skill away from you. That's why I love this skill so much. But again, like anything, like being a doctor, like being a lawyer, like being an architect, there's no free lunch. You have to learn these skills. You have to invest in your education. You got to practice. You got to put in the hard work. Okay. And let me just say this, guys. There are many people who attend my webinars looking for quick and easy money without any effort. And I'm here to tell you this, it doesn't exist. It just doesn't exist. How many of you agree that there's no free lunch in this world? Right? There's no free lunch. There is no such thing as easy money. All right? If trading was easy, nobody would work. Everybody would quit their jobs and everyone become a trader. But it's not easy. It is not easy. It is not easy to become a surgeon. It's not easy to become an architect. It's not easy to become a lawyer. Right? It takes education, it takes experience, it takes skill. Trading is no different. So if you're in it for quick and easy money, no effort, no work, please do not take the course. You will be disappointed. But if you want to learn it as a business, if you want to learn it as a skill, you're prepared to put in a hard work, to join our community, to contribute, to practice, this is for you. All right. So that's what I have to tell you, right? So we don't want people who are in it for quick money and no work, all right? Because you're going to be disappointed in the end. So I don't want to disappoint you, right? I rather tell you right now up front, okay? So the options course, we have got two. Level 1, which is Iron Shell, and level 2, which is Iron Striker. So level 1 is the kindergarten stuff, right? Kindergarten, primary school stuff, okay? Where you're going to learn how to use options to hedge your investment portfolio against drawdowns while earning extra income and turbocharging your investments. So in level 1, you'll be learning, again, all the kindergarten stuff, starting the A, B, C. So if you know 0, you know nothing, don't worry, we'll start from scratch. So in the first lesson, you'll be learning all the basics of options trading, right? And then in lesson 2, how to set up the charts, how to use all the trading tools and charting software. And of course, all the software and tools we use free software. So there's no subscription needed to be paid, none of those stuff, right? And then lesson 3, you learn the basics of calls and puts. Lesson 4, you learn about covered calls, how to generate extra income by selling covered calls against the stocks you're holding in your investments. Lesson 5, how to hedge your portfolio using protective puts. It's like, how do you buy insurance on your investments so that if the market burns down, if you're going to collapse, you make money by insuring your portfolio. Again, all these lessons will be presented with examples, case studies, and all those things, right? So lesson 6, you learn how to sell cash secured puts, one of my favorite techniques, which is how to get paid monthly premium while waiting for the stock price to drop to your intended buy level as an investor. So get paid to wait. Beautiful. I love it, right? Lesson 7, you learn about bull call spreads, right? Bull call spreads. Lesson, and of course, these are all our students again. This is Tony from Vietnam. Very glad to tell you that since beginning of March 2020, my investment account has increased by over 104%. Okay. The special thing is that I also help few friends make money. I've joined the UIP and options courses since February 2020, applied what you taught me in my investment, especially selling cash secured put, helped me to earn large amount of premium fees. Right. So lesson 8, you learn about bear put spreads. So this is very good when you are betting on the stock going down, like Alibaba, right? So you guys know that in my investment account, I hold Alibaba shares, which is like still going down, right? So I got to wait a while for it to recover, right? But in my trading account, I'm actually shorting Alibaba. I bought bear put spread. So every time Alibaba goes down, I'm making money. And the profit I make from my options trades helps to pay for my investments that are still down on Alibaba, right? So that's the great thing about it, right? Lesson 9, the cash flow wheel. Another very powerful strategy, how to generate regular cash flow by selling cash secure puts and covered calls, right? Lesson 10, bonus, you learn the basics of technical analysis. Lesson 11, how to create a trading station with all the option tools. Okay. Lesson 12 will be on options assignment, right? How to handle options assignment if they happen prematurely. So level 1 is all total of 12 lessons. Okay. This is Daryl. Daryl, I think, is from the US, if I'm not wrong, right? Hi, Adam. Attached is my mid-year score. You and Sifu Bang have changed the way I invest and trade forever. I'm truly grateful to you both. Knowledge you have passed on to me. I feel so fortunate that I've been your student for the last 3 years. Thank you a million times over, right? And he got a 93% return in 1 year using the options strategies. Really great stuff, right? This is Wong from Singapore, right? Yesterday marks my small success in stock investment from being intro to stock market by you 3 years ago to taking serious action 4 months ago, right? And I mean, the long story short is this guy got 108% return, right? Wong, SF Wong from Singapore, right? This guy, he's from Cambodia, right? 73% return within his first year, right? I'm new on this field from Cambodia. Maybe some of you don't know about it, right? Joined black market last year, right? Okay. Now, level 2, you'll be learning. Now, it says 14, but there's actually a lot more now because we keep adding new strategies, right? Because we keep upgrading the course every year, right? So In level 2, you'll be learning advanced options, okay, strategies, which is basically how to make money without getting the direction right, right? And how to be a net option seller and be paid premium instead of paying for premiums, okay? So you learn all about credit spreads, which is what I showed you earlier, right? Bull put spread, bear call spread, right? Iron condor, earnings probability spread, okay? Long diagonal spread, the one used by Liu Mingjie, right? My student who shared his performance, he uses this one. This is his favorite, right? Calendar spreads, synthetic long and short stocks. This is the one I showed you just now with the long break even. That's the one, right? Protective bullish synthetic, the bull bump. This is an advanced version of what I taught you, okay? And then you got the Snipex, which is trading the S&P 500 in a directionless way. Means we don't care where the market goes, but you make money as long as the market stays within a certain range, right? And then also a lot on psychology and risk management, right? How to understand and plan your trades, how to repair losing trades and minimize losses and costly mistakes to avoid in trading options, right? Lesson 11, how to build a profitable options trading business. Lesson 12, when to use which strategy. Lesson 13, back ratio spread. Lesson 14, earnings sniper spread. Have any of you traded on earnings? When the stock announces earnings, it can either get up or get down, and you must guess the direction, which is very hard. It's 50-50. But with the earnings sniper spread, we make money regardless of whether the price of the stock goes up or goes down on the earnings day. Why? Because the earnings sniper spread makes money as long as volatility increases in the stock, right? So that's the beauty about it. You don't have to bet on the direction, okay? Lesson 15, the bull put spread extreme, which is my invention and my favorite strategy as well. Lesson 16, Snipex 4B. Lesson 17, the collar. Lesson 18, bull bang collar. You know, so many, right? And so total is about 20 strategies just on the advanced course. So when you take the advanced course, all right, you have the first bonus. You get all the trademark trading tools that we use, all the scanners and screeners. Bonus 2, you get a lifetime access to our Telegram chat group. All right. One reason why our program has been so successful is not just the content or the trainer, it's the community. We've got one of the largest communities of investors and traders in the world now from 124 countries. That's the great thing about it, right? You know, to trade alone is very difficult because after a while, you may lose motivation. After a while, you get distracted. You lose focus. You don't follow your trading plan, right? But if you have a community behind you where, you know, our trading chat group is 7 days a week, over 18 hours a day, constantly chatting to share trade ideas. So if you got a trade idea, you share it, other members will give feedback on your trade. And then when you get a winning trade, people will encourage you, people will remind you, hey, stick to the rules, stick to your trading plan. So when you have a community behind you every day, it's impossible to fail. The only way you can fail is to not learn the lessons from the course, is to not follow the rules and to turn off the community. That's the only way you can fail. But if you learn the lessons properly, you practice it, you join the community, it's impossible to fail. It's impossible to fail, right? And the only person standing in your way to be a profitable trader is you. You're the only one. It's not the market, right? We can't control the market. We can only control our mind and our skills, okay? So this is our chat group called Options Iron Striker, and you can see it's very vibrant. We've got people chatting every day, right? Sharing their winning trades, right? Might like to share my winning trades for at spot, made 2 credit spreads on it, 1 bull put spread and 1 bear call spread, made $1,800, right? Adam and Bang, thank you much for the program. Started your program since May, now up 18,000. Yahoo, Phil from California, right? And so on and so forth, right? I've got so many of this around. So here's what you'll be getting for the options package. You'll be getting the options trading course level 1, 12 lessons over 22 hours of recorded lessons. Okay. Level 2, 20 lessons over 35 hours. So total would be 57 hours. Okay. And we upgrade our material regularly. So every time there's a new strategy, new examples, new case studies, is always being upgraded. And you don't pay extra for that, right? So it's a crazy thing. You only pay one time, invest one time in your education, and get lifetime of upgrades for no extra cost. So it's the investment of a lifetime in your financial education, right? You get the trademark tools, bonus 1, and lifetime access to our Telegram chat group. Now, I must make a disclaimer, okay? So lifetime means my life and Bang, who is my co-trainer, right? So this course will be taught by myself and Bang Pham Van, right? So Bang, by the way, he's the grandmaster of options. I'm only the master. So he's like Batman. I'm Robin, okay? So he's the great guy, all right? So what you see here, you're getting 8,000 worth of value, okay? 8,000 worth of value, and we put it into a package that's retailing usually at 6,000, right? 6,076 US dollars. And there are people who take this package throughout the entire year, 6,000. And they say, you know what? I make back my training fees within a few months, right? I went to university. I spent 50,000, 100,000 on my university education with all the student loans. I take years and years to pay it back. Can't guarantee me a job. Can't guarantee me an income. I'm stressed every day. But this one, I invest 6,000. I make it back in a few weeks, a few months. And for the rest of my life, I've got a skill. No one can take away my business and my career because it's mine, right? But once a year, during the black market, which is our crazy promotion, you get everything, right, at 75% off. So that's right, it's crazy. That's why we call it black market. It's like the market has collapsed. So you gotta grab it fast because this will be over in a day, right? And if you want to get this price again, you have to wait to next November 2022. So you got to grab this because it's the last day, right? So you can take a picture of this QR code, or you can click on this link or type the link. It'll bring you to the blackmarket.piranhaprofits.com where you can enroll in the options trading mastery package, right? So again, for today only, 1519, $1,519 US dollars net. It is a steal, right? It is a steal. If you talk to any of my students who have taken this, they say it's a freaking steal. You got to grab it, right? Now, besides this options package, of course, we have got up to 75% off all our courses and playbooks that you can check out at the Black Market website, right? So just to share with you very quickly, besides the options, the other courses, yeah. But before that, let me just, say this again, that you only need to invest $1,519, right, to acquire a life skill that will generate a lifetime of income. Okay, so I went to university, I went to business school, I majored in finance, I made a lot of friends, very nice professors, and yeah, it taught me some skills, but it did not teach me how to make money. It did not teach me how to trade, and that was something that I had to learn myself. It took me like 20 years with Bang to develop these concepts. For the first 10 years of trading, we were going in circles like most people. All right. And some people say, Adam, can I learn this on my own? Yes, but it'll take you at least 10 years. I know, because I took 10 years going in circles, making money, losing money, making money, until I got it, right? So the reason people take this course and they invest in this course is because they say, I want to cut short my learning curve. I don't want to spend the next 5 to 10 years going in circles and losing money to the markets, because that's even more expensive. The most expensive teacher in the world is Mr. Market. Because if you go against Mr. Market and you're not prepared with the right strategies, the right skills, he'll take everything from you. So you got to be prepared. You got to invest in your education, master this stuff, and go out there and make a killing for the rest of your life, right? And like I said, trading is not a get-rich-quick scheme. Trading is not gambling. But many people sadly treat it as gambling. And that's why they lose everything eventually, because luck doesn't last. Whatever you make money from luck, you lose it back, because luck will eventually not last. But when you treat trading as a business with a statistical edge in the markets, it becomes consistent profits. It becomes an income stream. So why is trading the perfect business? Because number one, it's flexible, right? If you start a normal business, 15 hours a day or 10 hours a day in the restaurant, in the shop, but trading again, 1 to 2 hours a day, that's all you need. 1 to 2 hours a day, all right? You can work anywhere in the world, on the beach, at home, on the couch. No employees, no rentals, no competitors, right? The great thing is I teach you all these skills. You make money, I don't make less. We make the same. In fact, by you joining the community, we share trades, we share ideas, we both make more money. It's a win-win situation. That's why we teach. Because why not, right? Recession-proof and relatively low startup capital. If you start any business nowadays, you need at least $100,000 on inventory, rental, employees. Who has got time for that? By trading, you can start with as little as $3,000 to open a margin account, right? And it's relatively low risk. If you start a business, the chance of a business succeeding is only 10%. And if your business fails, you lose everything, right? By trading, you only risk 1 or 2% of your capital on any one trade. Very, very low risk if you do it properly, right? So that's why I love trading. And if you love trading, if you think it's for you, because it's not for everyone, right? It's not for everyone. If you think it's for you, you love this business, you love this skill, join us. We're happy to take you on and be your mentor, right, guys? So you can click on the link, right? Or you can, again, do a screenshot on the QR code, bring you to the page, and grab this offer at $1519 net, right? Okay. Now, some people have also asked me about our other courses. You say, Adam, there's an investing course, there's a trading course, there's options, which one should I take? All right. My suggestion is, if you can afford it, take all, because it's a crazy sale. All right. And after tomorrow, it's going to go back to the usual retail price. Yeah. So first, we have got the investor crash course bundle. Now, for those of you who are totally new to the markets, you know nothing about the markets, my suggestion is take the investing course first. Learn to take the investing, because in the investing course, the first thing is you learn how to identify good businesses, how to analyze a business. You learn how to value a business. Is it overvalued or undervalued, right? So that's the value momentum investing course. And we are now giving it together with our ultimate investors playbook. So the playbook is a subscription where you get to be my apprentice, all right? Where basically every month I will show you a review of my portfolio. You can see exactly the stocks I'm holding, the stocks I'm watching, and every month I will do a deep dive research on at least 2 great companies I'm investing in. And the moment I buy something, the moment I sell something, you get an immediate alert with the screenshot of my orders. So it's almost like mirroring the way I invest every day. So this is the investor crash course bundle. Okay. And if you want to grab this one, it's going at 1329. All right, $1,329.65. And this is the QR code for this investor package. Right? So this is for people who know zero, start with investing. That's my suggestion, right? Now, we are having a special flash bonus only today, just unleashed right now, okay? Because it's only like one day before the whole sale ends, so we're unleashing this, right? Now we've got over, let me see, 2,000 people in the room right now, okay? Only for the first 300 who enroll, okay? And you have to enroll before the US market closes today, okay? If you enroll today, the first 300 people, you get an additional 3-hour live webinar with me on investing, okay? Plus an extra 1 month Ultimate Investors Playbook subscription. So that's a total of additional 3 months plus 12, 15 months, okay? Now, those of you who have actually enrolled earlier before the last few days, don't worry, you will still get this special bonus if you have already enrolled, all right? If you have not, grab it now, first 300 before the market closes today, okay? And again, for those of you who want to learn options to execute your trades, powerful, right? Uzi, submachine gun, and a grenade launcher, all right, with a high win rate and less capital. Then, of course, the options course, which I just went through, right? And again, for the options course, for the first 300 people, again, we are giving an extra 3-hour webinar by Bang, who is our options grandmaster, and a free 1 month subscription to his option tactics playbook, where you get to mirror his options trades every day and get live trade alerts, right? So you'll be getting this as a bonus for the first 300 enrolling today. Now, finally, those of you who want to take your trading skills to the next level, you want to learn how market makers manipulate the markets and how to identify how they manipulate the markets and how to ride on and exploit the manipulation, then you can go for the price action manipulation mastery package, right? So this is taught by Alson, okay, who is the expert in price action manipulation. And the thing about Alson that's different from me is that Alson applies this to trading cryptocurrencies as well, right? He applies trading crypto. In fact, 80% of his trading is in crypto, all right? So if you are interested in cryptocurrencies and trading stocks, Forex and all that using price action manipulation, go for this one, right? So again, QR code is over here. This is going at 1,004, which is 75% off. And again, you can take a picture of this. Okay, so the extra flash bonus for first 300 people would be, again, an additional live webinar with Alson, and in fact, sorry, 2 additional live webinars with Alson, right? So if you got any more questions on this, my team will be happy to help you. You can chat with them on the Black Market website, all right? blackmarket.piranhaprofits.com website. They'll help you to enroll. And again, guys, there's only 1 day left, right? So grab it, because if you don't, then you're gonna wait till next November, which is gonna be a year from now, right? Okay, so with that, I'm gonna answer questions that have come in. And I also promise to share 2 investments with you guys, right? I'll share with you 2 investments that I'm buying. This is not for trading, this is more for investing, because I think these are 2 great companies that are undervalued, and I'm buying them because I think that they will do really, really well over time. And I'll share it in a short while. Okay, but before that, let me just answer some questions coming in. Okay. Okay, so question number 1. Hi, Adam, can you share your thoughts on Omicron impacting the stock market? the funny thing is that people always think that to be a successful investor or trader, you have to read the news and to know what's happening. Is it the interest rates rising, inflation, Omicron? No. So one of the things you have to understand is, as a trader, ignore the news. Ignore the news. Who cares what's happening? Focus on the price action. Focus on the trend, support, moving averages, indicators. Ignore the news. Focus on the price action. You know why? Because you can't predict the news. And you can't predict what's going to happen to Omicron or whatever you call it, right? You can't predict how people react. So forget about it, right? Same thing as in investing. I always say that as an investor, I can't predict where the stock market will go in the short term. But what I can do is I can buy the fundamentally best companies. I buy them when they're undervalued and they will thrive under all economic conditions, right? So Muru, who's asking that question, my thoughts on the Omicron, I've got no freaking clue, and I don't care. Okay, who cares? Because I'm not a doctor, right? And even the doctors themselves have no clue what's going to happen, right? Yeah, so yeah, forget about that. Okay, Christian asking, what about algo trading? Do you use it? Actually, yes. I do have a robot I created, which is an algo trading robot. And if you want to, you can inquire with my staff to subscribe to our robot as well, right? So I do have a robot, but to me, and the robot is doing pretty well. I think this year the robot is up like 28%. Okay, but I prefer to trade on my own. So I'm always competing with my own robot, and I win most of the time. Okay. Daniel, with a small account, less than 3,000, what would you recommend between trading and investing? Right. So with less than 3K, you may want to consider options trading. All right. So you can use less capital to get the returns that you want. Okay. Julia, what is Adam's opinion about 3X ETF? I don't suggest using leverage ETFs because in the long run, you tend to underperform, right? And it's a long story, but if you go on Google, type risk of leverage ETFs, you can read a lot of articles on it. So I don't use leverage ETFs myself. Okay. Kenneth is asking, what sector rotation will you do to ride this temporary setback variant? Kenneth, I don't bother about doing that. All right. So I just take trades where I see the setup. If I see a nice setup based on slingshot, based on trend retracement, I take those trade setups. I ignore the news, what's happening in the world. I just look at the setup. That's it. Very simple. Okay. My life is very simple. Alwin, do you wait for confirmation candle before entering an options trade? Not really all the time, because remember, the good thing about options is I don't need the price to go up. Okay, so if the price doesn't go up, it goes sideways or down, I still make money, right? So because of that, I don't need to be so accurate on the entry. So I don't need a confirmation candle to enter an options trade. It's like kind of like with a shotgun, I don't need to aim so accurately. I can just blast a shotgun and the pellets will kill most people. Okay. Hi Adam. Ed is asking, hi Adam, how do you adjust position sizing and risk reward for options trading? Yeah, we'll cover all that in the course because it depends on the strategy. Because different strategy would require different stop loss points, and where you put the stop loss will determine how you size your positions. Okay. Again, someone asking me about how do I feel about the new variant. Well, I've got no idea because I'm not a doctor, and even the doctors have no clue, right? So who knows, right? Mario is asking, is it a good idea to take the basic investing course and options course at the same time? Yes, right? You can learn it both together or learn one first and learn the other. But like I said, with this crazy 70% off sale, grab it. Just grab it, okay? Because if not, then you're going to take another year, right? And next year, the price will be higher anyway because of inflation, right? Okay, so I think I've covered all the questions. Yep, I've answered all the questions I have. Great. So guys, I hope it's been useful. I hope you've learned a lot today. All right, hope it's been worth your time. And yes, finally, before I go, I promised 2 companies which I am investing in right now. Again, this is not for trading, it's for investing. All right. And it's undervalued. And the first one is actually Mercado Libre. Ticker symbol MELI. So Mercado Libre is the largest e-commerce company in Latin America. So Mercado Libre is kind of like it's like the Amazon of Latin America, right? And they are not only into e-commerce, but they're into electronic payments and lending. So it's kind of like an Alibaba of Latin America, or an Amazon and PayPal of Latin America. Okay. So Mercado Libre, if you take a look, it's an investment. It's not a short-term trade. My intrinsic value is about $1,500, 1,005. And recently it has retraced. Remember, I love, wave up, wave down, wave up, wave down. So I love to buy after it waved down to a support level, right? So I think it's worth about 1,005. Now it's about 1,002. So it is undervalued by about 17% undervalued, right? So I'm going to probably add some shares tonight or maybe tomorrow, right? And if you look at the weekly charts, you can see that there has been a pretty strong support, at the 100 moving average. Can you see that? Bounce, right? So it may find support here and bounce here, right? But as always in investing, I never go all in at one go, right? Because it could still break lower, right? You never know, right? So I like to buy maybe half first and half at this second support level, right? But what I know is that, in a year, 2, 3, it's going to be a lot higher because it's a great company. It's growing like crazy. Sales, profits are growing, cash flow is growing, and it's got a very dominant niche in Latin America. So again, this is not a recommendation. This is not a recommendation for you to buy because I'm not a licensed financial advisor. I can only tell you that I'm buying it. I like it. That's all right? So do your own research, okay, before you make any decisions. The other one is actually MasterCard or Visa, either one, or in fact, both of them, right? And if you look at Visa, for example, again, this is an investment, not a short-term trade, although I think it probably will bounce soon. And Visa, very rarely does it become undervalued, right? The intrinsic value is about $230. And right now, because of the short-term bad news that Amazon is dropping the Visa credit cards on the UK Visa credit cards on the Amazon platform, because of that short-term bad news, we've got oh my God. That's right, we've got that panic selling, right? And you can see it's very rare that Visa hits the 150 moving average. The last time it happened was during the COVID crash, and now it's hitting that again, right? Right now at 197. So I've been buying Visa. I may buy more today and tomorrow. And again, it's something that I know in a couple of years it's going to be a lot higher. And this is a rare chance to grab Visa for me. So this is my opinion, and it's my little bonus sharing this with you today for being here and appreciating your time here. All right. But again, guys, before you buy any stock, any option, any real estate, invest in yourself because you are your greatest investment. Invest in yourself. That is the best investment you can make in your life. So thank you for being here. And again, I'll look forward to seeing you guys in the chat group. And do note that when you enroll in the course, we give you 30 days, at least 30 days to learn all the material before you are in the chat group, right? The reason we don't put people in the chat group immediately is because when they come in, they don't have the knowledge and they can't follow, right? So you gotta have at least 30 days learning the course, and then in the chat group, you're there forever with me and the members, right, guys? Okay, so all the best. May the markets be with you, and I'll see you really soon. Take care and enroll soon because it's going to be over in a day.